Welcome to Crypto Minutes, your daily cryptocurrency news for March 1, 2019. We source a minimum of 5 of the best trending articles of the day, from popular news aggregator CryptoPanic.com. Timestamps and the original articles can be found in the description links below.
Ethereum hard forks successfully. Ethereum has just successfully upgraded to Constantinople with the new rules live, including a reduction of new supply from 3 ETH per block to 2 ETH. The fork went smoothly as far as we can see without any problems. The two main Ethereum clients, Geth and Parity, have stayed in sync, with miners, node operators and businesses now upgraded to the new chain. After much wrangling and some delays, there were no jitters at a technical level except that a ForkWatch site went down about 3 minutes prior to the fork. DDoS perhaps. Traders showed some excitement as well, with Bitcoin quickly rising by $100 and quickly falling by as much earlier today. Constantinople Ethereum upgrade keeps Geth and Parity in sync, February 2019. Historically and logically we're far more likely to have a problem caused by a fork some unknowable time after the fork block, rather than at the fork block itself. Nick Johnson of ENS publicly said to Sooth Lane Reddick, who reported for Constantinople Watchtower duty. The cat herders had apparently herded the miners prior to the fork to avoid a potential repeat of lazy upgrading, as was seen when the Constantinople testnet launched in October. Now it's all over. After about 2 years, Ethereum has seen an upgrade. Block times will return to normal. Miners will receive about 7,000 ETH, worth close to $1 million, less per day. Some DEVs will enjoy more efficient techniques for second-layer setups that can avoid going to the blockchain court even more than previously. The Beacon Chain testnet is to follow in March, with a race heating up in the blockchain space to solve scalability. Even Bitcoin has now joined, as an invisible boom of sorts appears to be afoot for stupendously techie coders who are busy this year with complex equations at the dawn of a new era for blockchain science that sees talent demand grow 500% in 2018. Divided as they may be, we will solve the scalability problem is what does unite them as cryptos race towards mainstream after passing the tipping point in 2017-18. The New York Times reports that Facebook is already in talks with cryptocurrency exchanges about selling the coin to customers. Facebook Coin could be launched much sooner than expected. According to a recently published New York Times (NYT) report, which cites multiple anonymous sources, Facebook employees are already shopping the coin to cryptocurrency exchanges while trying to get the product out in the first half of the year. Back in December, Bloomberg published a report which reveals that the social media giant plans to roll out a stablecoin for WhatsApp. However, the NYT reveals that the company plans to integrate the cryptocurrency into 2 of its other major properties, Instagram and Messenger, which would give the coin an unprecedented level of exposure. The audience of the 3 aforementioned apps reaches 2.7 billion monthly users. Control issues. As of now, very little is known about Facebook's much-hyped foray into crypto, including the level of control that one of the most valuable companies in the world will retain over its cryptocurrency. If Facebook wants to place emphasis on decentralization, which is the whole point of blockchain technology, it will harder for them to profit off their project. A hiring spree. Facebook's blockchain team is currently expanding, and now they have multiple job offerings in that niche. The social media behemoth launched a team for exploring blockchain technology back in May, with David Marcus spearheading the effort. Poll reveals majority of crypto investors see Bitcoin price at $100,000 to millions long-term. Ever since the mysterious Satoshi Nakamoto released Bitcoin into the wild, the world has been speculating over the first-ever crypto and its long-term validity and value. While the current bear trend and over 84% decline in Bitcoin has crushed much of the enthusiasm the market saw during the 2017 parabolic advance and media blitz, crypto investors still believe that in the long term, Bitcoin price will reach over $100,000 to as much as millions of dollars. Poll results: Bitcoin price to $100,000 or millions long term, votes majority. Prominent crypto trader and top author on popular charting site TradingView, the outspoken Magic Buchanan, polled his over 20,000 Twitter followers hoping to find out what the collective crypto investing community thinks Bitcoin's long-term value will reach. The trader himself thinks that Bitcoin price will go to at least $100,000 within 4 years, adding that he thinks it could even reach $150,000 in that time. Eventually, he says, it could surpass $1 million. Related reading, from $20,000 to $3,000 and back, how Bitcoin price counters sentiment in the crypto market. The large majority of his followers agree, according to a Twitter poll the trader ran. As much as 42% of nearly 3,000 voters think that Bitcoin price will reach $100,000 to millions long term. 30% see the leading crypto only reaching a maximum of the previous all-time high price of $20,000 to $100,000, and just 13% think that its value will top out somewhere between $3,000 and $20,000. The bear market got the best of some investors, who see the price of the first ever cryptocurrency falling much further from here, with its long-term price being pegged at anywhere between $3,000 and virtually worthless at $0. Only time will tell where Bitcoin price eventually ends up, but MTtptD's technical analysis has been spot on for much of the last 2 years of Bitcoin buzz, and his support of these astronomical values on Bitcoin might suggest that those lofty predictions could become a reality at some point in the future. Top TradingView author calls Bitcoin's break of $6,000, now says bottom is in. MTtptD is among the top authors on TradingView, boasting over 10 million views across his trading ideas and over 53,000 followers on the platform. The eccentric trader has earned his strong reputation after making a number of correct calls far in advance of the move actually happening. No such example is better than Bitcoin's break of critical support at $6,000. The actual plummet didn't occur until mid-November, but the trader actually called for the drop all the way back in May of 2018, a full 6 months in advance of the powerful bearish movement. Now, the trader is claiming that the bottom is in, and Bitcoin is following a bottoming fractal from the 2015 bear market that led to a period of accumulation before a bull market resumed. Once the bulls returned, history was made as Bitcoin skyrocketed to $20,000. Related reading: Peter Brandt calls for 80% plus Bitcoin price decline over a year ago with chilling accuracy. Given MTtptD's accurate predictions, and his calls for $100,000 plus in the future, if Bitcoin truly has bottomed, the next bull run may take the cryptocurrency to incredible heights. Time to explore cryptos, says pension consultant advising on $400 billion. Cambridge Associates, a pensions and endowments consultant with $389 billion in assets under advisement, has stated institutional investors should start exploring the crypto space. In looking across the investment landscape, we see an industry that is developing, not faltering, they say. Although the crypto industry remains in its infancy, we think institutional investors should begin exploring it. They recommend that no more than 1% is invested either directly into cryptos like Bitcoin and ETH, into ICOs or STOs, or otherwise indirectly into crypto, blockchain companies. The vast majority of institutional investors have little to no cryptoasset exposure, they say. We expect traditional venture capital funds to increase their investments in cryptoassets going forward, meaning institutional investor exposure is also likely to rise. In a somewhat detailed statement, they explain the potential different crypto investment strategies, highlighting institutional investors cannot invest more than 20% in non-qualifying investments, i.e., investments in digital assets. Still, the industry is nascent and an allocation of more than 1% of a portfolio on a look-through basis does not appear prudent, even for those comfortable assuming the very high risks involved, they say. The 46-year-old US-based advisory has changed its tune after it told institutional investors to stay away from cryptos at the height of the 2017 bubble. In our opinion, institutional investors are better served focusing on investing in companies seeking to profit from the development and adoption of blockchain technology and fintech, financial technology more broadly than holding cryptocurrencies directly, they said in November 2017. Now they're implicitly recommending a diversification to cryptos of no more than 1% of holdings after studying the crypto space. That comes after 2 pension funds became the first in America to start investing in cryptos, in addition to Canada's biggest pension fund investing directly in ETH last year. A number of university endowments have also dipped their toes into cryptos, with the infrastructure continuing to develop for institutional crypto investments. Putin sets July 1 deadline for crypto regulation, Russia to become a crypto hub? Russian President Vladimir Putin has offered his opinion on cryptocurrencies before, saying that cryptocurrencies pose serious risks. Now, after the Russian lower house of the Federal Assembly, the Duma, has revealed its intention to launch an oil-backed cryptocurrency, Putin has commanded authorities to create a specific regulatory framework for the nation. The head of state issued a document to the Russian legislative body, ordering the passing regulation by July 1, 2019. This is yet another deadline from the Russian president, who last year asked for laws to be passed on the legality of cryptocurrencies. The specific order is for federal laws aimed at the development of the digital economy. This time, the focus is on turning the Russian economy into a digital one, and the order asks for a regulatory framework for digital financial assets, more financial resources based on digital assets, and the regulation of civil law digital settlements. Russia's stance on cryptocurrency has been ever so slightly ambiguous. 2018 first saw them take cryptocurrency seriously, with Putin even forming instructions on the trade of major crypto assets like Bitcoin and Ethereum and the regulation of ICOs, which contrasted with a much harsher statement made in October of the same year. Opportunities to launder funds acquired through criminal activities, tax evasion, even terrorism financing, as well as the spread of fraud schemes. We have seen how Bitcoin has transformed a payment unit into an asset, which is bought in order to obtain a high yield in a short period of time. This is the definition of a pyramid. But different opinions have been offered by lawmakers in the nation. At the time when Bitcoin was legalized but mining was still being reviewed, Deputy Finance Minister Alexei Moiseev said, "The penalties will be different, mostly administrative, but if someone created the cryptocurrency for the purpose of settlements, then there will be a criminal punishment." Rumors have also been floating about the launch of national cryptocurrency, dubbed the cryptoruble, though no substantial information has materialized. With further regulation, however, the prospects of this national digital currency may just rise.
Thank you for listening to Crypto Minutes. This is not financial advice. If you enjoyed the articles, please click like, share and subscribe or donate. See you tomorrow for more breaking news.